In this video, traders, we are going to look at what useful information can we get from a daily candle, because too often we just look at all the candles on the chart and we just go, oh yeah, it's just 4 price points. But there's more to it when we really dig in. Stay tuned. Hey guys, warm welcome to you. Thank you for joining me. Alright, so what information can we get from a daily candle? Now listen, I'm guilty of this as well. We look at a chart, we see a candle, we think, okay, there's the high, there's the low, there's the open, there's the close. That's what a candlestick tells us, right? But actually, you know, when we stop and we think about really what it's telling us, there's a lot more information in it than we take for granted. Now, I give you the fact that, hey, I accept the fact, should I say, that you know, all of this is not always useful all the time, and it's only under certain circumstances, but knowing that, hey, let me just double check what it's really telling me. Let me just think about for a second who's involved in this, why the price has done this, what could happen next, where's the next move potentially for this price based on the pattern I've seen. It helps you think a little bit clearer. Again, using the price action methodology, thinking about things from a price action perspective, which is the way that I like to do things, then this really helps. So, why is it only a daily, by the way? Let's just get that out of the way first. A daily because I think it's, you know, when we're just looking at a time frame, now there's a time and a place, of course, for our 5, our 15, our 60s, our 120-minute candlesticks, of course, because we're trying to get as much data as we can, and it makes sense to be able to drill down and see what's happened in that day. But the reason why a day is so key is because everyone's working off a day. Now, I recognize in currencies this is slightly different because of the nature of the way they trade, but if you imagine an index or futures, some sort of futures contract or stock, or really anything as well, I guess as well a currency, but not so much. You know, there's always a defined high in the day. Everyone's working off that day. Stock opens at X o'clock in the morning and closes at X o'clock in the afternoon, depending on which time frame we're trading and which bourse we're trading on. So everyone knows, hey, that's the open, that's the close, there's the high, the low between that point. Same with an index, same with the futures contract. I appreciate that some of them are 24/5, but you get the idea. So that's why a day is so much more important, because so many more people are recognizing it as, hey, it was the high of the day. You know, often we see in the New York Times, the Financial Times, the high of the day for that was this. So everyone's looking at it, as opposed to a 15-minute, the high of the 15-minute, only a few day traders are probably going to be looking at that. So you get the point. Anyway, so what have we got? We know, guys, that's our high, we know it's our low, we know that our close is here and our open is here. If it's a red candlestick, we know that the close is below the open. In other words, it went down during the day, not necessarily gapped down from the prior day, but we know it's green as well if the close is higher than the open. Pretty standard stuff. But what we often forget is some of the things that we're being told inside the candlestick. So the first thing, guys, is the range. Okay, so the range is the high minus the low. We know this, but what does it actually mean? Well, there's so many things we can get from a daily range. We can work out our stops from our range. So we can say, hey, the range was 150 pips. If I'm taking a swing trade now, maybe I'm going to use that, or as an average, that's what our ATR is, or the biggest of the last 7 days, to work out that as a stop position. Say, oh, 150 pips is going to be my stop because that was the biggest range we've had for the prior day. I'm looking for a 3-day move, etc. Or it could be a target. You could say, right, well, that's an acceptable and reasonable target. Maybe I look for 100% of the range, or maybe I look for 50% of the range, or whatever it may be. You know, you've got to think that, hey, this is what the market has done. So this is something that is evidence to suggest that it could do this again, and that it has already happened. In other words, okay, if that's an average, then we know, hey, the average range is likely to be this. We can frame our trade around that. And I'm a really big fan of doing that, guys. Current conditions, looking at the current conditions and framing your stops, framing your targets based around the current conditions, or using it as an extreme and saying, okay, that was the largest, like we did with the stops of the last 7 days. I'm going to use 50% of that for a price target, or I'm going to use 20% of that for an intraday target. So using that as a useful anchor point that other aspects of your trade are seeded from. And of course, insight. You know, we get to see how the range was in relation to prior days' ranges. Was it big range? Was it a shallow range? Was it an average range? Was it normal conditions? Something extreme happening? Again, insight, intel into what's happening. Then we look at the body percentage. Again, this is insight. So intelligence into the price action, underlying price action under the bonnet. So we can see the body percentage. Now, what do I mean by body percentage? Well, the high minus low, if the body, i.e. was just here, say, let's imagine that that was our body, then we've got a very low body percentage. In other words, we've gone to some quite extremes in the middle of the day, intraday, we've got a quite high, quite low, but open and close are relatively close to each other, which could depends on conditions, could suggest to you that we really have a little bit of indecision, or that something's changed the sentiment of things intraday. Again, depends on the scenario, depends on the market, all this kind of stuff. But sometimes we just kind of look at things and go, oh, you know, there's the body, there's the high, there's the low. And whilst the data is still the data, you know, actually thinking about, okay, well, actually, you know what? We did go to extremes. We really didn't close that far off where we opened. It was a bit of a nondescript day. We tested some highs, didn't really find any buyers, tested some lows, didn't really find any sellers, came right the way back to where we were. So a bit of insight and intel into that. The other thing is open to close direction. Of course, we know this, guys, the insight and the gap information. So open to close direction, obviously, if it's red, we know that the market's pushed down from the open. And if it's green, it's pushed up from the open. Fine, pretty standard stuff. What about gap information? So this is how we can then tie it into whether we've got some sort of gap, because this on its own won't tell us what happened previously. We never know from this candlestick whether it gapped down 2%, 20%, 50%, or whether it was right in the middle of the range. We don't know from that candlestick. So we have to take the prior day in and go, okay, where did we open up? Oh, we gapped up. But actually we filled the gap. Not only did we fill the gap, let's say our close yesterday was here, by the way. Let's say that was our candlestick there. We gapped up. Not only did we fill the gap, but we actually undid it. So we start to get a lot more information and more insight into what's happening in that candle. And the final thing we've got is tail or wick length. This is a really big look under the bonnet of any potential sentiment change. If you've got a big tail on your candle down here, then you're saying, hey, well, why do we see such extreme lengths intraday? You know, what caused us to do that? But more importantly, what caused us to do that and reverse back up and end up closing here? Now, it'd be even more powerful if it was a green candle, because it's actually reversed all the way back up. So again, you're thinking about, why does the sentiment change? Does that mean that actually, is that the trigger? Is that the thing that's going to make it now rally on hard? Because we've already tested to lows, we've had a little sniff around lows, it hasn't really attracted any sellers. In fact, it's done the opposite. It's attracted buyers, and we've closed up. Is that now a sentiment change that's going to give you the good swing trade for the next 4 or 5 days? Could be. These are the kind of things, guys, that we overlook because we just look at it and go, oh, you know, what is what it is. But in actual fact, sometimes we get some really useful intel. Not, as I say, back to the beginning, not always. You know, most candlesticks are just benign and just sitting there, chugging around, just like most charts. You know, most charts you look through, there's no setup there, just going up, going down in a range, in a trend, whatever, you can't find a setup. But every now and then, there's going to be a really good one that stands out and you take the trade. Same with the candles. Every now and then it'll be a daily candle that really tips the hat, really kind of shows you under the bonnet, again using that analogy, under the bonnet as to what's actually going on. You know, how's the engine doing? Is it ticking over? What's happening with it? And that might give you just that little bit of extra edge to say, okay, well, I can be on it a little bit more early now. I can really get an understanding, a feeling of how the crowd of money was behaving in that day, and then extrapolate and make a bet, if you like, or a trade as to what would happen after that. Of course, we always want to use it to keep our risk managed and all this kind of stuff, but just bearing in mind, and I think it's useful for everybody, guys, to take a step back sometimes and think, what does it actually really mean when we get that long tail? What does it actually really mean when we get a low body percentage? What does it actually really mean when we suddenly get a wide range or a low range? And just rather than just saying it and stating it and going, oh, it's a low range day. Oh, it's got a wick on that. Oh, it's got a small body, and just moving on. Just pausing and thinking, is it relevant? Is it trying to tell me something that's useful? Is it a clue as to the future direction of this asset? Because if it is, and you've spotted it, you can get on early to a decent potential move. All right, guys, that is some useful information we can get from our daily candle. Take care. Always keep your risk managed. I'll see you in the next one. By the way, before you go, make sure you have checked out our channel sponsor. There's a link to them in the description below. And I always appreciate your support, guys. Your likes, your shares, your subscriptions, your comments. It is much appreciated. Take care. Bye-bye.